Hey everyone, this is John Feneck with the Feneck Commodities Report, and with me today is my YouTube partner, Don Durrett, founder of GoldStockData.com, the source for gold and silver junior stocks and some mid-tiers and some larger names from time to time. Don, welcome.
Yeah, John, looking forward to it.
So I wanted to kick things off. We rarely talk about what we've done together, but we met probably about 4 years ago, have become friends and started this channel where we try to interview CEOs and bring, some things out to investors that they may not be thinking about, good and bad. And a lot of these names have really worked on. I went back and looked at some of our past interviews. Serato just broke out. I don't know if you remember that when we were interviewing Mark Brennan at one times free cash flow a number of months ago. But that stock was around 35 cents US at the time, and it's 63 cents US today and has just been slowly moving up. No huge breakouts on the chart, but just a beautiful looking chart. They acquired Ascendant ASDRF since our interview and seem to be doing quite well. Aftermath Silver, you and I just talked about on a podcast together yesterday. We interviewed Michael probably in the 30s, I want to say, last year. Stocks at 58 cents US now, hit 65 last week. And another one that we just talked about was Guanajuato Silver, a producer in silver, a GSBRF in the States. And James and I just spoke at a conference together 2 months ago. That stock we interviewed, gosh, I think around 14 cents US. It hit 25 on high volume about a week, 10 days ago. So, when you look at the percentage gain on these stocks, Don, you and I are doing a decent job, I think, of identifying value for investors because we're not chasing stuff that has already moved up and producing, minimal returns. I think we're producing really nice returns here in just a number of months.
You actually skipped the two best ones. Norseman, I think it practically doubled after we did our interview, and Lahontan went up about 20% after. But maybe Lahontan's not up as much as some of these others, but they sure got a bounce out of.
Yeah, I talked to Kimberly Ann, the CEO, right after, about a week after our interview, and she said that was like the biggest volume spike that she's seen on the stock in a couple of years. That's LGCX, if anyone wants to take a look. But I was just looking at buying some Lahontan today because I did an aerial view of a stock that I own, Guardian Metal, GMTLF, and they're not very far away at all. And I was just wondering if they have some critical minerals on that property or not. So I'm going to do a call with her tomorrow.
Couple others you didn't mention that did great after our interview. Sonoro did fabulous, right?
Oh, yeah. That's right.
West Red Lake Gold, I think they did well after we did our interview. So, yeah, we have a magic touch here.
Yeah, West Red Lake was around 47, 48 cents when we had Gwen Preston on, and that's done really well. And Sonoro Gold, yeah, that's been a home run for us. We identified that one last year. We did interview them again this year, but gosh, we were interviewing them around, I want to say 6 cents US, and the stock hit 14 yesterday.
I think Norseman was probably the best. I think it doubled.
Well, don't forget Sydney Resources. We just did too. SDRC. I mean that.
Oh yeah. I forgot about Sydney. Yeah, that one slipped my mind. Yeah, Sydney. They ripped. Like the next day, they went up 30%.
Yeah, and that was the highest volume in 2 or 3 years. They said so. Again.
Also, yeah, every single one of these companies are trending upward since our interviews. Every one of them. I don't think there's been one that. I can't think of one that's basically rolled over.
No, and we've been asking some pretty tough questions, which Mike Rowley, our guest today, will experience in just a minute or so. But yeah, Mike's CEO of Stillwater Critical. The ticker is PGEZF in the States and PGE in Canada. Mike and I have known each other for about 4 or 5 years now, and through a cold call that I did to him, actually, I was a big Savanier holder, SBSW, and saw this smaller project attached to it in Montana, and we asked a bunch of questions of him, and he answered everything. I have to say, Mike's one of the most responsive CEOs that I work with, so I'm always telling us the good and the bad, which I love, because not everything is good. Let's face it, mining is a tough business. So, Mike, welcome to the show.
Thanks, John. Thanks, Don. Good to see you.
Mike.
So, Mike, we've got limited time today. What I'd like to do is just, if you can give us a 7 to 8 minute overview of Stillwater Critical, and then we'll ask some questions.
Sure. We're in the very good position to have to share the Stillwater complex with Savanier that you mentioned, John. We acquired it, I think, 8 years ago now. We've just now started drilling our fifth campaign there. Key point of that is the scale of the district. This is one of the largest systems of its type in the world, and it's the best in North America. And it hosts Sibanye, who are producing literally half a kilometer from us. That's very significant. We are bringing giant mine models from South Africa, and that's why it's so significant that we retained two of Ivanhoe's top geologists. One of them is actually in Montana right now, and we are drilling our fifth campaign. We've just completed our largest raise. Key point among that, Glencore is in, and they've written their third check to us in as many years, and that is hugely significant. They're a 15% shareholder. Bradley Adamson is a board member. He's a VP at Glencore. And we also have a technical committee with them. We're very excited to be there. We've got 1.6 billion pounds nickel, copper, cobalt, 3.8 million ounces of PGEs and gold, plus 2.3 billion pounds of chrome. And we really are just getting started. If you look at our figures, it makes sense why these 5 deposits across 10 kilometers want to connect. Worth noting that our neighbors' deposits are contiguous across that whole 10 kilometers. This is a layered system. We're simply following the layers here. And that we have 33 kilometers total strike here to expand across. Drilling now, really excited. And the government piece, I expect John and Don will want to follow up as well. We've got DOE grants in place. We've met our congressmen and senators. You've seen pictures of that in the deck. And we're following up with the DOE, all the other acronyms as well in DC. It's been fun.
So along the lines of that last comment, like, the EO, the executive order that Trump put out in March, was very significant in my view. You follow that up in April with kind of doubling down and giving more love to U.S. projects like yours. Yours is in Montana. What's the vibe like in Montana? Because, Don and I interview a lot of guys from Nevada and from Idaho, but, Montana's not one that we've really interviewed before.
It just ranked number 23 in the Fraser survey of mining jurisdictions. It's very positive globally. Our experiences there have been very, very good. I've met all 4 in the federal delegation, plus the state delegation, the governor. They're all very pro-resource. All we're doing is building on Sibanye's good name there. And there's a great desire to expand the critical minerals production that's been going on really for over 100 years from the Stillwater complex, from everything I've heard. We're well in front of government. You're absolutely correct that I think 2 projects in the state have received the Fast 41 treatment. Sibanye has also received other recognition, 45X tax credits. And having just come back from the Montana Mining Association show, very well attended with very high level members of government there as well. It's definitely a good state to be in. And I think the legacy of responsible resource extraction is there. And the desire to build those domestic supply chains is there.
Great. So can you walk us through like the top 5 commodities that are on the property? Because I know it's a polymetallic deposit. I know it. You just walked us through the size of this. This is a very large Platreef type deposit, which is underexplored. But can you give us a sense for how much nickel, how much copper, et cetera?
Sure. I'd be glad to. We're sitting at about 1 billion pounds of nickel, and that's 47.5% of the value. Used the prices as of a couple of years ago. I think palladium is number 2. We're a little over 2 million ounces of palladium. From there, in terms of value, it's got to be cobalt, 10.5, and then copper. I mean, remember that we have 500 million pounds of copper, half a kilometer from a producing U.S. mine. It's a really good setup. And then on down through rhodium, gold. And we didn't include the chromium, actually, in the economics. Don and I were talking about that before the cameras rolled. But that's very significant here as well. It's a true polymetallic, and it fits the Ivanhoe Platreef model that we're applying. You can also think of Anglo American's Mahalaquena right next door. They're both in the Bushveld, South Africa. And the point is that these models are directly relevant in the Stillwater igneous complex. It's very much the same as the Bushveld. It's wonderfully underexplored, and that's a key point for you and your followers. We are the first to ever model it with Ivanhoe quality. And you've seen that as of our last October and especially our most recent March news release, technical news release. The model is a thing of beauty, and I'm pleased to report we have 2 rigs turning right now, and the model is holding up very nicely. We're liking what we see from both rigs.
Yeah, excellent. So you did a raise, you mentioned. I saw 7 million closed, and that was a bit more than you had hoped for, or?
Yeah, it's been confusing, frankly, because that was originally a 6 million life offering and we overallotted to 7, as you described. We still have Glencore's piece to go. And they've
Okay.
indicated that they're going to top up pro rata. And we also, myself, I have not written a check yet. There's a few of us, plus a couple of other investors that are coming into that final round. We're going to get very close to 9 million total raised here by the time it's done.
That's amazing. Congratulations.
Thank you.
So yeah, that's been one of the challenges. Wouldn't you agree with junior mining, whether it's US based or not, is raising that capital to drill, because you guys have had a tremendous amount of success in drilling over the years in terms of hitting over and over again, right? But you know, it's a capital constrained business, so you can't and won't go out there and just dilute shareholders for the sake of drilling, which I think is important to note.
We didn't drill last year. You're absolutely right. The flip side of that is that we've kept 100% ownership of a really good asset. We've been
Right.
offered project level deals, JVs, earn-ins, you name it, since day one. Very hard to do that until you know what you're giving away, right? So we
Yep,
basically
absolutely.
done smaller programs, smaller than even our permits allow, to keep 100%. I think from your show last October, all the predictions were correct. We're very nicely moving now, and we've been able to do our biggest raise ever. We're now drilling our biggest campaign ever. We'll move this quickly through feasibility studies. That's what we've been talking with the US government about. And that's frankly what we've been held back by in the past few years in the market. We're not moving as fast as we wanted to move.
I'm going to turn it over to Don in a minute, but I just had a couple of other things. And you know our style. We're going to ask some direct questions today, and I think you've done a great job so far answering these. But I'm always trying to think from a client perspective how they see your stock, right? And so the stock was in a serious uptrend for April, May, June, and then you did the financing and it backed off like it should. You know, obviously you're diluting current shareholders by raising money, which you have to do to drill. But the stock really is taking kind of a hit here from 23 US up to down to 16-ish US today. I mean, what do you see for what, as a large shareholder yourself, what are you aiming for this year? Not an exact price, but like what kind of gains would you be happy with in terms of growth from here? Obviously, we just were doing 22, 23 cents on pretty high volume just in May. So do you think that given the amount of money you've raised, that you'll get back to that level at some point later this year, 6 months from now? What do you think?
We have a lot of catalysts in the bank, and you're correct that the placement probably capped that price, and we're probably missing out of some of the palladium and platinum rise right now, especially platinum, because of the placement, which is still open. And that life exemption placement, that free trading stuff, that was new. This is our first of that type. You definitely see churning in the market when you announce one of these, and we were warned about that, and we saw it. That will soon be behind us, and we have a lot of catalysts coming. We've actually not yet announced what we're actually drilling. I mean, it's obvious from that March 26th news release. We released the targets in broad terms, but the first catalyst is going to be placements complete, and then what we're actually drilling, and then results from that. There's definitely a bigger resource coming on the backs of that. That's probably early next year at this point. Results leading into that, and then that. I would like to do a PEA by this time next year. Obviously, we have to get this body of work finished first, but metallurgy has always been on our mind. We're building on past stuff by AMAX, but we want to bring that into the modern sense. And then there's the non-core assets that we have. As you know, we've got 4 other projects, and there's news coming on those as well. We'll be focused on Montana. In terms of share price, I'm reluctant to make a prediction, but as Don and I were talking pre-interview here, we've got over 20 billion of gross value in the ground. We should be a lot higher than our current market cap.
Yeah, the serious disconnect there in our view as well.
Oh.
So just to summarize what you just said, with Platinum's ascent here, Platinum really took off. The ticker on the ETF, if anyone wants to take a look, is PPLT. That tracks the price of Platinum pretty well. That April, May, June, July really took off. And a lot of that gain has happened while you've been raising money, right? So like to your point, you haven't been able to capitalize on that move in platinum price or palladium price for that matter. You mentioned the DOE possible, money. I know you've been talking to the U.S. government for, probably 18 months now or something. And it usually takes about 15 to 24 months, I'm finding, for juniors to really get traction and get that check in hand.
Yeah.
So is the DOE or DOD type money able to be used for a PEA?
Yes. DOD
Okay.
especially. What I've found is that the DOD, through that Defense Production Act Title III, will fund drilling, feasibility studies, metallurgy. It's matching grant funding. And we've gone in for tens of millions in a 3-year program to basically accelerate this through feasibility studies. Drilling heavy, something like 80% of the budget is on drilling. But complete those necessary studies, make those decisions. I'm already being asked what it'll cost to build a mine here, right? By various parties. And that's sort of putting the horse in front of the cart, or cart, what's the expression? Cart in front of the horse.
Yeah.
Because we haven't, we're an inferred resource and we know we're a 10 to 20 year mine life, but please let's properly do the studies. And are we working with Sibanye-Stillwater's infrastructure or not? These questions are hugely significant. And we need to work these things out. The DOE will fund generally bigger work, and especially beneficiation, processing, downstream stuff, that kind of thing. That's been our take so far on government money.
I have one other question, and then I'll hand it over to Don. So when you and I met, we're pretty much connected to Sibanye-Stillwater's. That hasn't changed. Metals prices have gone up substantially since then, and you have a 15% or so ownership from Glencore, who's a top 3 commodities player globally. So do you? And I know you can't particularly say this, but you must think about this. Like, what is the likelihood that you have some type of bidding war down the road where Glencore, obviously has put their best foot forward, but doesn't have a control position, and Sibanye is connected to you? I mean, do you see that Sibanye's share price has gone up over 100% in the last few months? I mean, is this something that you guys think about?
Definitely. And it's all harmonious because there's no reason we have to be on the other side of fences here. We have the claims that we have. They are the Platte Reef just south of their Marinsky equivalent JM Reef. It all fits Bushveld perfectly. We have the wider mining widths that would make them economic. Look at Ivanhoe's cost projections for Platte Reef, right? $600 per ounce. That's what we would be bringing to this district. That's what's resonating with congressmen and senators. Sibanye are conservative. They're producers. They don't usually mess in the exploration development end of the spectrum. Glencore does, but they know they need me and my team, especially my team. And it's a very friendly work together. Actually, the technical committee has been much more enjoyable than I ever expected it to be. They need us. We need them. It's a good fit. As for how the pieces fit together, I'm not sure, but it's going in the right direction, definitely.
Okay, so the way that I look at this is kind of try to value the company kind of like today and then in the future. So if we look at what they have currently, they have $18 billion in situ, and 2/3 of that is base metals. And the reason why is mainly a nickel mine. Mike mentioned 47% of the value is nickel. They have a billion pounds of nickel. Nickel is actually, fairly valuable. It's more, it's not. For instance, it's more valuable than zinc and lead, for instance. Nickel is something that's highly valuable. Companies are actually looking for that. Then they have chromium, which is also very valuable, and then copper and cobalt. So all 4 of their base metals are actually kind of quality base metals, if you will, which is kind of impressive. But it's 2/3 of their revenue. So this is kind of a high quality base metals mine, and it's still early. Their precious metals and their PGEs are valued at almost $6 billion in situ. It's about 4 million ounces currently gold equivalent on their PGE and gold, and it's growing. So currently I have it valued about, if they sold the company, about $200 million. So it's only basically a 2-bagger if they sold it. But I think it's going to grow in size, but it all depends what they sell it at. And then, I mean, if you look at this thing as a low cost precious metals, because the precious metals is where you get your leverage. You don't necessarily get your leverage in your base metals. So if you focus on the precious metals, include PG as precious metals, you have a lot of leverage there. This is basically a very, very low cost precious metals mine with currently about $1 billion in free cash flow just using precious metals. So you got $1 billion in free cash flow with leverage, which is very impressive, and it's growing. So I think this is going to be a 1.5 billion free cash flow with leverage. So it could grow to 2 billion, 3 billion free cash flow. You put a 20 multiple on that, you're looking at 40, 50 billion dollar company, whoever buys this. So the key, but Stillwater doesn't get that because they're a pure exploration play. They're going to sell it long before that. They're not going to get that. The only thing they're going to get is, a percentage value of either the base metals or the precious metals. So like I said, right now, in situ, they'd be lucky if they got 10% today, be worth 1.8 billion, but it's really difficult to get 10% in situ. But if they got 5%, it's 900. And I don't know if they'll be able to get that kind of leverage. Glencore owns 15%. So it's difficult as an investor to know exactly how to value this company. I see it as a minimum 2-bagger with kind of 4-bagger potential. One problem here is they don't have real strong insiders. Mike can talk about insiders, but with Glencore at 15%, I think Glencore is just sitting there, ready to pounce, if you will. I think Glencore wants to buy this and they're just waiting for the right timing. But for now, they're like, go ahead and drill this thing. We'll be patient, drill it for us. And at a certain point, we'll be ready. And so I think that, but Sibanye might also be a bidder here. So we have basically two players that want to buy this. I see this as, if you like these quality base metals, if you like those, then it looks pretty juicy. I mean, this, I look at it, I value it as a 2 to a 5-bagger. So Mike, yeah, my only question to you, I mean, you can comment on what I said. Oh, I wanted to make one other point. This is a big property. They actually have a 40-kilometer strike by 8 kilometers wide. A lot of drill targets. I'm only valuing this thing as a 50% growth, but it could be 100% growth. This thing could double. It's like 18 billion in situ today. This thing could go to 50 billion in situ easily. It could easily get to 50 billion in situ. So it definitely is a juicy kind of drill story. But it's complicated. It's not an easy project to value. So I'll go ahead and throw that to you, Mike.
Well, it's a polymetallic, and that's part of why we're valued where we are. That is part of why Glencore likes it, is that we're not beholden to any one commodity price. They like that basket. You're absolutely right. In terms of growth, we currently have 5 deposits across 10 kilometers, as you've seen in our figures, and they obviously want to connect, and we've actually now modeled how to connect them. We're currently drilling around 2 of those only, simply because we're funded for a 2-rig program this year. We'd like to do more. The growth potential is huge, and it gets very forward-looking. Ivanhoe is 95 million ounces, 8 billion pounds, sort of it's 4 or 5 times our numbers. And that's only in 4 kilometers of strike. We've already got 10 that we're filling in now, and we've modeled 20 within the 33. So we control the lower Stillwater complex, which is vast in terms of scale. Within that scale, we're modeling grade, and we have the good optionality you've seen: high grade, mid grade, bulk tonnage. There are lots of ways that this could go, and we have the right people to advance it. So I think you'll see us grow more in terms of the current deposits, and then we get up to tenfold from de-risking those deposits and showing how they can be mined as you move from inferred ounces through to feasibility studies. And that would be the other piece of the value equation.
Right.
Great. Hey, Mike, we didn't talk too much about your team, but I wanted to close with that. I met Danny at 3 different conferences now, and he's ex-Ivanhoe and seems to have a really good understanding of geology. He's very, very sharp. Like, can you tell us how you, as a junior, were able to get someone of that quality a few years ago?
Took time. We met him years before that, and there was already mutual interest because the rocks we're in are so much like the Bushveld that he's used to. But I won't give away his age. He sees one more big discovery in his career, and I'm very grateful he joined us for that. When we put out our second resource, he joined us before the second resource, just before. He saw the potential and made the move. And he brought Albie Britz with him too, senior geologist, both from Ivanhoe. Very significant to have Robert Friedland's right hand at Platte Reef, literally the guy who proved up the Platte Reef mine, come to join us in Montana. And he's there right now, and Albie will be as of next week. It's an exciting time. They could have gone anywhere, to answer your question, and I'm very glad they joined us. Those are their images that you see in our materials.
Yeah, thanks for clarifying that. For those that don't know Ivanhoe and Robert Friedland, I'd suggest taking a look at IVPAF, which is Ivanhoe's U.S. ticker. Phenomenal story there. I've been in the stock since 2016, and Rick Rule was a huge fan of what Robert was doing back then when I worked with Rick. I can only imagine the money he's made in that stock because I sold too early, but I'm not selling Stillwater too early. So fool me once, but not twice. So Mike, great job in explaining what's happening at Stillwater. I'm so happy that a good junior company like yours is getting enough cash to do what you want to do with the drill bit. And I think you have a deep bench there to work with. So congratulations on the raise. And we'll check back in with you hopefully next year.
Oh, look forward to it. Yes, thank you. And thanks both of you for helping to get the word out. That's appreciated.
Yeah, good luck with the company.
Thank you.
Our pleasure.
Cheers.
Thanks, Mike.
Bye.
So, hey, Don, in summary, let's see, you said, this could get to 50 billion in situ from 18 currently, and you thought that maybe it's got like 2-bagger to 5-bagger potential. Did I hear that correctly?
Yeah, the reason why it'll get to 50 is a combination of exploration success plus the upside in the value of these metals. So the metals are going to go up, so the in situ is going to go up, and then they're going to find more. And they're definitely going to find more. I think they could double the size of this thing. So if you double it, that's 36, and then it grows by 50%, you're at 50. So I think 50 billion is actually a pretty good target for in situ. But the hard part is there's no way for us to know what they're going to sell at. I think it has very low risk. I mean, if you buy it and you hold it, I think there's very low risk you're going to lose money because it's just going to get more valuable. So chance of losing money on this stock is pretty low. But the question is opportunity cost. It's really difficult to anticipate a 5-bagger here. But I think 2 to 5 is kind of my target range. But I don't think that, for instance, I think Ivanhoe is also another player here. So we got Glencore, we got Sibanye, we got Ivanhoe. I think all three of those companies are going to be interested in this project. So it's just a matter of when they decide they want it. Because once one of those three say we want it, I think it's going to happen. And that's not good because the earlier this thing gets taken off the table, the lower the less they're going to have to pay basically. So
right. To just clarify for you there, because I've known Mike for a little bit longer, like I've had dinner with him a couple of times and I've asked him that question directly, like, would you sell for a 20% premium, tomorrow? And he's like, hey, look, I have to show the board different offers, but there's no way we're selling for cheap here because we know what we have in the ground and we know the size of this thing. So they just really needed money. When I saw them 2 PDACs ago, they were probably raising like a million or two. And it was a tough market, right? Nickel and platinum and palladium have been really underwater since February of 22 because of Russia. Russia produces a ton of those metals. And go ahead.
Yeah. The issue here is that Glencore only needs 35% of the voters. So if they offer 70% premium and they only get it to 40%, then they go 75%. They can just keep pumping it up until they get to 51. So if Glencore wants it, they'll get it. It's a matter of how badly they want it. But I don't think that if Glencore wants to pay 100% premium, they're probably going to be able to get 35% to get on board. That's kind of your risk as an investor. Whereas if you had strong insiders that held like 35%, then you'd be very comfortable. Then there's no way it's not getting taken out anytime soon. And then you're much more comfortable. You're like, okay, I can own this stock because the opportunity cost isn't as severe. But owning 15%, they can take this out anytime they want.
That's a fair point. I mean, again, like February of 2022 seems like recent, but it's 3.5 years ago. I mean, the pressure that Russia's conflict with Ukraine has put on metals, like we just talked about, is massive. I mean, if you look at charts of nickel, platinum, and palladium, just take a look. I mean, it's been up until recently really, really bad price action. I don't know if you saw yesterday, but Trump is now pressuring Putin again to come to the table on Ukraine. So, if we do get a resolution in the Russia-Ukraine war, I think projects like this are just going to get another bid because that's going to be your additional insider buying or funds coming to the table, Don. Like I'm seeing a lot of private equity and hedge funds getting more and more interested in.
We actually don't want any interest in Stillwater at this point. We don't want any interest. We want them to drill and expand the size of this deposit. I mean, we really, I mean, ideally, we actually want their market cap to kind of, it'll move up a little bit, but as far as interest, if there's more interest in these PGEs, and there's also interest in their quality base metals, then it's more likely to get taken out quickly. So, but we want this thing to get bigger. I mean, as an investor, you want this deposit to double in size. They have these 4 or 5 deposits they're drilling. We want them to drill, all right? We don't want them getting taken out. The longer that they hold on to this deposit, the better. I think that's the way I look at it. And if this thing doubles in size, right now they're like 4 million ounces of gold equivalent PGEs. Love to see that thing get to 6, 7, 8. At that point, this is a very, very valuable mine. I mean, you're talking about super, super low cost PGE mine. Super low cost.
Yep. Yeah. And just because we saw it last week, I'll bring it up. I mean, Newmont's all-in sustaining cost per ounce is 1,600, which with the margins they're posting, still very, very attractive. But I mean, you're seeing a lot of juniors that have 9, 10, 1,100, all-in sustaining costs when you do the math. And these things can really fly. Like we had interviewed Sonora, remember? Those guys are around 1,200 in their paperwork, but I think that's going to come down. And then Next Gold, we just talked about them on a show yesterday, NXGCF, they're at 1,050 ASIC the last I looked. I mean, when these companies get into production, which I think both of those will, then you're going to start seeing like real margin, and real free cash flow. And the leverage that these little companies have, it's just amazing, right?
I think the byproduct ASIC for this project was going to be about $500 or less because the nickel is so valuable and the copper and the chromium, those are so valuable. I think we're looking at an ASIC 500 or less. I mean, which would be insane.
That would be insane.
There's very few of those projects in the world. So the free cash flow would just be ridiculously high. So I actually think the key for this is the gold price and the platinum price is the key to this whole project because those are the metals that have all the leverage. And if those keep going up, like once gold gets above $4,000, they have 400,000 ounces, but I think it's probably going to grow to 1 million. And then if gold goes to 4,000, platinum could go to 4,000 too. And that at that point, there's going to be huge interest in this project. Huge.
Yep.
So it's
and I think the backdrop has really changed for them because of Trump. Like, I mean, being in Montana, it's been a safe jurisdiction, as Mike pointed out, a very good place to work. But that doesn't mean you're getting fast tracked. That doesn't mean you're progressing quickly. Like now, the limelight really is on the U.S. and this project is connected to a major that's very successful.
Right, and there's not a 4 million ounce platinum palladium project in a good jurisdiction anywhere else in the world. It's the only one. The rest of them are smaller, much smaller. So
much smaller.
Big PGE projects are rare, and in good locations they don't exist. So at a certain point, the value of this company is going to explode. If the PGEs keep going higher, and I think they will. I mean, it wasn't too long ago. Platinum was $1,000. It wasn't that long ago.
Not at all.
And $1,000 platinum, nobody's had any interest at all.
Yeah.
But there's going to be a ton of interest. I think platinum is going to catch up to gold. At a certain point, I think platinum will rip and catch back up to gold. Maybe not on par, but it'll be in the ballpark. It'll be close because platinum is rare. I mean, super rare. And so at a certain point, it will rip. It'll be like silver, right? It'll outperform gold. And platinum is a silver metal. Platinum and palladium and silver are all basically silver type metals. So they all basically outperform gold when gold at a certain point because they're more rare than gold. I mean, not more rare, but they become a proxy gold.
Understood.
Actually, platinum and palladium are rarer than gold, but they become a proxy and then they start ripping higher, especially platinum.
Yep. Well, we'll leave it there, Don. Thank you for your insights. Really appreciate it. And Don's website, goldstockdata.com, deserves a look, everyone. If you want to do some more research, this is the time. July, August, before things take off in September. You want to be buying some Stillwater PGEZF. You want to be buying some juniors. Put positions on. That's what I've been telling my clients. Like, stop looking at stuff. Start buying things. Like, this is, stop trying to get the perfect entry point. Don and I don't ever get the perfect entry point, and we've been doing this for decades. It's just a matter of holding your nose and buying sometimes. And what's the worst that can happen?
We didn't do macro, but I actually want to talk about two names today, just because you mentioned it's time to buy, whatever. First one was Equinox. So Equinox is trading about a 3 multiple because they have high cost, but go look at their company presentation. Their costs drop, their ASIC drops. They're giving guidance for their ASIC to drop $200 in 26 and then drop again in 27. And they're getting no value for that. Everybody's ignoring it. Everybody's saying, well, Equinox has high cost because their ASIC is 1750. But it goes to 1550 in 26, and then it goes to 1450, 1500 in 27. So everybody's ignoring that, saying, well, we're going to value it today. So Equinox at a 3 multiple is just silly cheap. The other company that's silly cheap that I wanted to mention that's, I think, mispriced is Northern Star. So Northern Star dropped 30%, and they're trading at a 6 multiple, and they're mining 1.6 million ounces, but it's growing because they're adding the Hemi projects. So Northern Star has a ton of gold, I think like 60 million ounces. They have 3 big mines, and they're adding a 4th mine, Hemi, which is a fabulous mine in Western Australia, and they're not getting any value for it. It's like everybody's ignoring the future. They're ignoring where Northern Star's going, and all they're doing is focusing on this quarter. So if you believe that gold prices are going higher and you have a little bit of more of a long-term perspective, Northern Star and Equinox look like fantastic plays right now. So I just thought I'd bring those up.
Yeah, thanks for doing that, Don. I know Northern Stars and GDX and Equinox just had a new CEO move. I don't know if you saw that, but Darren Hall, I believe, was named, and if I'm not mistaken, he was the head of Caliber during the good years there, and that's an upgrade. I think personally, he was managing capital very well there. So hey, we got to run to our next thing. Don, it was a pleasure. Please check out Don's website. Please check out mine, FenneckConsulting.com. You can check out our performance there. You can check out our services there that we offer clients, and we're happy to talk with you. Thanks everyone for joining us.